Hey, welcome back. It's Jason Walter here. In today's housing market update, I'm going to be sharing the latest housing market stats for California. This is because the California Association of Realtors just released May's housing stats today. And there's a mix of good news and bad news for home buyers and home sellers. There's a lot to cover in today's video, so I'm actually going to be breaking this down for you in a two-part video series. So stay tuned for part 2 in a day or two when I post that video. This video in particular took hours to make given all the research and analysis that was involved in it. So if you get any value out of this video whatsoever, then please hit the like button and also share this video with anyone you think may benefit from it. And if you're a subscriber to the channel, you know that I'm a realtor, but I only service the greater Sacramento area. So if you're looking to buy or sell a house in another part of California or anywhere in the US, then please go to homeandmoney.com/Jason to get linked up with a great real estate agent in your neck of the woods. That's homeandmoney.com/Jason. Before I dive into May's housing stats for California, I want to give you a quick disclaimer, something that I mentioned on the channel several times before, but I'm seeing a lot of misinformation on YouTube, so it's worth mentioning once again. Starting in March of last year, due to the stay-at-home orders that were in place across the state, our housing market was more or less on hold, and real estate agents like myself weren't allowed to meet with their clients face-to-face for 3 weeks. Therefore, many home sellers took their houses off the market, and buyers put their plans on hold as well. Therefore, when comparing housing stats in May of this year to May of last year, the numbers are going to be severely inflated. For example, because home sales absolutely plummeted or fell off a cliff in May 2020, the percent year-over-year change in home sales in May 2021 are going to be crazy high. This is mainly due to the fact that the housing market in April 2020 was more or less on hold, and that negatively impacted home sales in May. And real quick, here's a word of warning in the months to come, because what happened with our housing market in June through the rest of the year last year? The answer is after the stay-at-home orders were lifted in late April last year, the housing market in general in California and across the US took off like a rocket ship. That was partially fueled by pent-up demand from homebuyers who were forced to the sidelines due to the stay-at-home orders last year. Also, interest rates dropped drastically, which further increased homebuyer demand because it made it cheaper to buy a house. Then, to add fuel to the fire, many people were allowed to work remotely from virtually anywhere with internet access. So here's the point I'm trying to make here. So when you're comparing year-over-year stats for June to the rest of this year compared to last year, a lot of the housing stats probably will decrease. This is because the housing market was on steroids last year from June to the end of the year. In contrast, when looking at housing market data in May and April of last year compared to this year, a lot of the housing stats are going to be very much inflated. With all that said, I reported 2 months ago that home prices in California in March reached an all-time record high of $759,000. That was the 6th record high since the beginning of 2020. Then that record was broken once again because the median home price in April in California reached an all-time record high of $813,000, and that was up 7.2% from March and up 34.2% from April 2020. As I reported last month, here are all the records that were broken in California in April. It was the most insane housing market stats I have ever witnessed, and I've made over 200 videos about housing market updates. With all that said, let's go over what we're seeing in May, because the California Association of Realtors just released a report this morning, and like I said before, it's a mixed bag of news for home buyers and home sellers. May home sales dipped 2.7% on a monthly basis in April and up 86.7% from May 2020. Again, I'm not putting a lot of weight on the year-over-year numbers because home sales absolutely tanked in May of last year because we had stay-at-home orders in April. Remember, it takes about 30 days to sell a house, so if you don't have a lot of activity in April, that really negatively affects home sales in May. Therefore, the 86.7% increase of home sales on a year-over-year basis is artificially high and hardly worth mentioning. And again, I would not be surprised if home sales decrease in the coming months on a year-over-year basis, and this is because the housing market took off big time after the stay-at-home orders were lifted last year. The California Association of Realtors even posted about this because they stated the following: the sharp yearly sales jump was expected as the housing market was hit hard by the pandemic shutdown last year, when home sales dropped to the lowest level since the Great Recession. However, the 2.7% decrease of home sales from April to May of this year is definitely something we should pay close attention to, especially if home sales continue to decline in the months to come. Stay tuned. And again, over the coming months, I'm going to be looking at month-over-month changes and not year-over-year. The California Association of Realtors president, Dave Walsh, stated the following: the overheated housing market is showing signs of a much-needed cooling and could be a sign of waning buyer interest as the torrid pace of home price increases and buyer fatigue adversely affected demand. We're seeing many would-be buyers taking a break and hoping to see more listings as the economy reopens and prospective sellers list their houses for sale. In the meantime, the median home price in California reached another all-time record high and inched up 0.5% on a month-to-month basis to $818,000 in May. That's up 39.1% from the $588,000 recorded last May. So in 1 year, the median home price in California went up from $588,000 to $818,000. That year-over-year price gain was the highest ever recorded. A major part about why the median home price in California is so elevated is due to the sale of luxury houses over $1 million. So $1 million houses surged more than 200% from May 2020. Its market share is almost double what it was from a year ago. Here's another way to look at this. So sales growth of houses priced above $750,000 grew by triple digits. So from 750 to just under 1 million, home sales grew by 154%. But when you look at houses that sold in the range of 1 million to 1.9 million, home sales grew by 216%. Houses over $2 million or higher, home sales grew by 324%. This is actually something I've witnessed ever since this pandemic begun. So as you can see here on this graphic, sales of houses of 1 million to 1.9 million and 2 million plus houses have increased at a higher rate than any other price segment since last summer. How crazy is that? In addition, here's another crazy housing market stat for California. Some more $1 million houses were sold in the past couple of months than homes priced below $500,000. So even though home prices remain elevated right now, there's some early signs that the housing market may be cooling off, as I alluded to in my video last week. Here's a quote from the California Association of Realtors Vice President and Chief Economist Jordan Levine. He stated the following: a lack of housing inventory continues to push up prices, and modestly higher interest rates, increased competition, and declining affordability have caused some buyers to become discouraged. Despite strong growth rates, the level of home sales has fallen on a monthly basis in 4 out of the last 5 months. Is that from a lack of houses for sale, slowing buyer demand, or both? It's hard to know what the answer is just yet, but have a look at this because this is bad news for home sellers and good news for home buyers. Pending home sale data for May was virtually unchanged from April. That suggests further slowing in the coming months. Fortunately, new listings have finally started to rise, which could help sustain a higher level of home sales deeper into summer by providing much needed supply. Let's talk more about this slowing of pending home sales. And of course, by the way, a pending home sale is when a home seller accepts an offer from a home buyer. But here's a graphic to take a look at. This shows the percent change of pendings on a year-over-year basis over the past several years. As you can see, pendings dipped 9.8% in May 2020 compared to 1 year ago. So here's my question for you guys though. So is this dip of pending home sales an indication that home buyer demand is slowing? Or is a decrease of pending home sales mainly due to the fact that we have a low housing supply right now? So in other words, if we had more houses available for sale, one would assume we would have more pending home sales. Or number 3, are we comparing apples to oranges? Because remember, in May of last year, our housing market absolutely skyrocketed due to low interest rates and pent-up demand from home buyers. Here's some housing stats to help answer that question. So the housing supply in California went from 1.6 months to 1.8 months. In other words, the housing supply actually increased. What this means is that at the current sales pace, if no new listings were to hit the market, then all houses listed for sale would be sold in 1.8 months. So an increase is a sign of a slowing housing market. However, in order to have a more balanced real estate market between buyers and sellers, we would need approximately 4 to 6 months of a housing supply. So we have a long ways to go. In addition, active listings have started to climb. This is the total number of houses available for sale at any given time. And here's what CAR reported. They reported that active listings reached its highest level in 6 months after a 6.6% monthly increase in May. That's following the seasonal pattern. Housing supply typically climbs during this time of the year and usually remains on an upward trend until late July, early August. The pace of growth on a month-to-month basis is on par with the average growth rate of 7.6% from April to May recorded between 2015 to 2019. In other words, what we're seeing right now as far as listings is what we normally would expect given a normal market. Therefore, and this is pure speculation, so I'd love to hear your thoughts about this, but I'd be more inclined to say that the drop of pending home sales of 9.8% from May 2021 to May 2020 is mainly due to 2 major factors. Number 1, comparing May of this year to last year is like comparing apples to oranges. This is because 2020 was an abnormal year to say the least. So pending home sales in May 2020 absolutely went to the moon, as you can see here on this graphic. And a lot of what led to that last year doesn't apply to this year, so that may be one reason why contract signings are down this year. And number 2, we should not be blinded by the fact that many home buyers are getting priced out or they're simply just giving up. Many home buyers are beyond frustrated right now and they can't find a house, and when they do, they get outbid. So this may be one reason why pending home sales has been decreasing. Meanwhile, the price per square foot in California reached an all-time record high, and the sales to list price ratio reached another record high of 103.8%, breaking last month's record high. This means on average in California, houses are selling for 3.8% over their asking price. In addition, 7 out of 10 houses sold above their asking price in May. And if you're a home buyer, here's something you should definitely be aware of. So even though mortgage interest rates dropped about 0.25% from a year ago, this should not be the number one reason why you should buy a house right now. This is because when interest rates dip, home prices tend to increase, and that could negate the savings from a dip in rates. As you can see here, home prices absolutely surged 39% from a year ago, and that was the reason why the average mortgage payment skyrocketed 34.8%. So despite the fact that mortgage interest rates decreased by 0.25%, the average mortgage payment surged ahead as home prices increased. Alright, so that was part 1 of this 2-part video series I'm doing for the California housing market. So stay tuned for part 2. I'll give you an update regarding housing inventory and also how each region fared in California, because those varied quite a bit. If you got any value out of this video, then please share it and also hit the like button. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.